Before I talk about the short squeeze, let's learn how to read candlestick because all of the charts shown in this presentation will be shown in candlestick. So the main advantage candlesticks have over a line chart is that it provides more information. So in a line chart, you only see the closing price, but in a candlestick, you see the opening price, the closing price, the high, and the low. The main difference between a bullish candlestick and a bearish candlestick is that in a bullish candlestick, the closing price is higher than the opening price, and in a bearish candlestick, it's the opposite. The opening price is higher than the closing price. So keep that in mind. Back to GME short squeeze. So GME did not really take off on January 13, but this is when we saw the first major warning signs emerge. GME went from $20 to $40. Held its gain pretty well. Went sideways for a week, building higher lows, higher lows, higher lows. And towards the end of the consolidation, it builds higher highs. This is an indication of strength. It shows that there are more buyers present than sellers in the stock. And on January 22nd, a lot of demand came in, shown by the volume, and GME took off and went all the way to $136 in after hours. And in after hours, short squeeze can be more volatile due to low liquidity. There are not a lot of seller available in after hours for the short seller to cover the share. And you can see here the volume in after hours is very low compared to the volume on intraday. And somehow the stock managed to go from $70 to $136. On January 26, we saw the first major support. GME tried to break below the support 3 times. However, GME held the support pretty strong. It shows that the number of buyers were sufficient enough to withhold the selling pressure. And when traders saw how strong the support is, they came in and bought, and the stock took off and rallied all the way to $365, again in after hours, on extremely low volume. Next, let's talk about Circus Breaker. The main purpose of Circus Breaker is to curb panic selling. It's applied to both individual stocks and market indexes. Let's see how Circuit Breaker looks like on GME. So on January 29, GME went to, I think, $512 in free market, and soon after that, we saw a big sell-off. GME went from 400 to 120 within 1 hour, and within this 1 hour, it got halted 8 times, and each time lasted about 6 minutes. Here it got halted and then got unhalted and then got rehalted right after, giving people very little time to exit. Again, same thing happened on March 10. It got halted. The price went from 340 to 170 within just 1 hour, uh, or even 30 minutes, within 30 minutes. And here you can see how long the candlestick is compared to the previous candlestick. Um, this shows how fast the price was dropping. Next, let's talk about behavioral finance. So through GME, we can learn a lot about traders' behaviors and psychology. So the first thing I want to talk about is herd behavior. People tend to mimic the financial behaviors of the majority of the herd, and this often leads to a big rally or sell-off. And next is emotional gap. It refers to decision making based on extreme emotions such as anxiety, anger, fear, or excitement. Key reason why people make irrational choices. Here, let's look at the chart. So when people heard about GameStop and how it can go to $1,000 or even $10,000, people got FOMO, fear of missing out, and a lot of them chased the stock and bought about 300, 400, or even 500. And when they saw irrational price action, price dropping quickly, they became emotional due to the fear of losing money. And a lot of them sold into this big drop and lost a lot of money. Many of them froze and they did not know what to do, especially the newbies who don't have, the experience to know how to handle, this kind of situation. And also the short seller, they got excited and they chased into this bottom, and a lot of them got squeezed back all the way to 300, and they also took a loss. Same thing happened on March 10. If you compare these two charts, they look almost identical. This depicts human behavior. It shows that human nature will always be the same. People will always chase, and they will always panic and sell. The last thing I want to talk about is market efficiency. So I believe that the market we're in is semi-strong form efficiency. It's assumed that the current stock price adjusts rapidly to the release of our new public information. A good example are UPST recent earning reports and semiconductors companies spiking on news of chip shortage. UPST on March 17, it reported good earnings, revenue of 86.7 million compared to estimate of 74.1 million, and what happened is the stock went from below 60 to $165 within just 3 days. Quite amazing. Quite amazing. And another example is semiconductors companies spiking on news of chip shortage. Intel went from $61 to $68.5, and Taiwan Conductor TSM went from 108 to $128.